Hello everyone, this is Autosolve. Today we have a specific use case for AI, in particular for audits. So we will be looking at the case of anomaly detection, right? So in accounting, finance, or tax, there is a large number of transactions happening all the time. Which means that it would be beneficial for purposes of audit to have a AI agent that will be looking at your transactions and it would be identifying them either as anomaly, something that doesn't usually happen, something that appears to be out of place, or it would be a normal transaction, right? This could be potentially very useful for audits and in the course of normal business, right? If someone posted a journal or created a transaction in error, this system would be able to flag it up and allow for speedy correction of this error prior to even the audit happening. Or potentially when the audit happens, you would be able to prepare yourself for the audit by running this AI network for every single transaction or journal that you have, and therefore flagging anything suspicious up. So how do we do this? Right, so we will be using a technique or architecture called Autoencoder. Right? So how does it normally work? So you give a transaction to the artificial neural network. It tries to shrink it down and reconstruct it, right? So that's how you effectively train it. So we give many transactions to the neural network and it train it to reconstruct it. With this in mind, with this technique, the neural network learns the ways of transactions. It learns how transactions should be, what kind of vendors it should have, what kind of amounts it should have, what kind of dates, and etc. And when it tries to reconstruct it, it should be reasonably the same sort of transaction, right? Now, how do we actually define anomaly, right? We're going to rely on the neural network to reconstruct the transaction properly should this be a normal transaction. So if it reconstructs the whole transaction absolutely without any issues, we think, wow, this transaction must be really normal. Now, if the transaction that we're giving to the neural network, if it's not reconstructed accordingly, if there's some weird variances in how it's reconstructed, we assume that that is a potentially alien transaction, right? That will be the principle that will be working here for us. So here is the setup that I'm using for this. So I'm using a Google Colab. Here I'll be using PyTorch framework for building neural nets. So here effectively I'm setting up my dependencies. Then the next stage is to build a mechanism for generating many transactions. So we're going to build a kind of training data set of fictitious transactions in 50,000 transactions, right? So in order to train a neural network, we need 50,000 cases at least, a large enough number. Oh, and prior to getting into this, allow me to demonstrate how this would work. So this is the code, evaluation, and the training. This is how it looks. And I'm just going to quickly shoot it down to demo, right? So here we're building a quick set of transactions. We're building a demonstration transaction which will be okay, which will be a normal transaction. We're providing it a user account ID, the vendor ID, the document type, currency type, day of the week, when transactions happen. So that will be Tuesday. Month number 5 and the amount, right? For currency, I believe that's US dollar, and number 3 will be Japanese yen, I think. Yes, that will be number 3. So this transaction will be happening on Saturday, which is suspicious, which is why this transaction should result in anomaly results. And the amount, slightly larger amount, actually 10 times larger amount. Yeah, so these are the factors that will actually influence our result of how neural network responds to this not okay transaction and okay transaction here. So once we run it through the network, we can see that the first transaction comes up with low score, only 1% score of error, and the other transaction, the weird one, the anomaly, appears to be with 5%, almost 5% error, right? So we flag it up as anomaly. And here is the breakdown of which factors appear to have influenced our decision to tag this transaction as anomaly, as a weird one, right? So the amount played a very large role, 22%. The account was quite wrong as well, influenced it big time. Document type influenced it big time. Currency was extremely large as well compared to the OK transaction. Day of the week, the fact that it was Saturday, that influenced it massively. And yeah, so this is kind of a quick demo of how this would look. So you would be able to pick any transaction, convert it to a specific format, and run it against the neural net, right? So you can already see how, for instance, your company, when it generates transactions, journals, or whatever, you'll be able to place this kind of a code within your company, and it would be effectively running the same sort of situation and the setup. Right, so let's go back to data generation. So we've already discussed what we're going to be building. So first of all, we need to build a synthetic data set of all these transactions. So like I've mentioned previously, we're going to use 50,000 records for our fictitious data set. So in terms of the account numbers, we're going to have to obviously build a distribution, normal distribution of numbers, right? So here we're using Numpy, which is the Python sort of module that allows you to work with arrays. Now, as we all know, Python does not have arrays. It does have lists, but Numpy allows us to bring arrays into the mix here. So we're building the mean of the population here. We're specifying the amounts to be between 500 and 5,000, and we want this population to be built for 30 for array of the size of the 30. And then we're doing the same thing for sigma or standard deviation, and these are the two variables we need in order to build kind of the data set that will be uniformly distributed. The next step, we are building vendor preferences. So within this setup, we would like to use this logic that a vendor, which we're going to have 50 of, each vendor will be preferring to have a special account, right? So a vendor number one, for instance, would be using the first three accounts. The vendor number two would be using normally the other three. And this way we would know that if vendor number one was to use the account number 50, that would be a little bit suspicious. Right? We're using the simple or simplified assumption for that. And in order to do that, we are choosing a random choice for our vendors, for each vendor. So we're kind of building like a data set with predetermined random accounts that will be preferred by the vendors. Okay. For currency, so currency, we're going to have four currencies: USD, Euro, Great Britain Pound, and Japanese Yen. And for each one of those currencies, we're going to put the probability distribution. So probability distribution tells you on how likely this will be that the next transaction will be of this currency. So for instance, for US dollar, we have 70% likelihood. Euro would be 15%. British pound will be 10%, and yens will be quite rare within our data set. So most of the transactions out of our 50,000, we're going to have 70% of them all having US dollar. So if a transaction appears to be of this currency, that's already going to be quite suspicious. Document types. So these are just random document types: invoice, PDF, etc. Right? So we just got like a distribution here as well, which could be a factor. It doesn't look like it's going to be a factor, major factor in our case, but yeah, it could be, depending on the setup. This is just another variable for you to tinker with. So going down further up, so we're building all these effectively distributions, specifying various pieces of the data set. There's also going to be one for day of the week. So obviously 0 would be Monday, and this number 6 will be Saturday or Sunday. And the same for the month. So we're carrying on with building the data sets, and then we're building our anomalies. So our data set consisting of 50,000 records, obviously they will first build them here as random, uniformly distributed based on probability distributions transactions, but obviously we have to inject and make up some fake anomalies, which we'll use within the data set to train our neural network, because it's going to learn how to determine them. So we're building three types of anomalies here. We are building amount spikes, so the amounts that look extremely large, that arouse suspicion. Then there's going to be wrong currencies, like rare currency with Japanese currency, for instance. And the vendor account mismatch. So if a vendor normally uses these three particular amounts, but we're using a different one, then that obviously contributes to the case of anomaly. And we're obviously performing all of this stuff here. And as a result of this function, we are returning the data set with the labels of either it's an anomaly or a normal transaction. So here also worth speaking about one-hot encoding. So the neural networks, they really do understand arrays better, right, or tensors, as we call them, and we have to convert our features into one-hot encoding, and allow me to briefly show you what that means. So effectively here, if we have a variable with colors, red, blue, green, blue. Kind of the neural network does not understand red, blue, green, or whatever. We need to convert it to numbers, and it's easier just not to show the number to the neural network, but rather show it an array, right? So array, for instance, here, record number 1 would be an array of 3 numbers, 1, 0, 0, where 1 would be a tag for red, 0 would be tag for blue, and for instance here the tag for green would be 0. That way, with these 3 markers, we're able to explain to the neural network what are we talking about. So every time the red color marker would be on and the other ones would be off, the neural network will learn what the red color means, right? And the same for the blue. So record number 2, it's got 0 tag for red, 0 for green, but 1 for blue, and etc. and so forth and so on. So instead of just having these names for the colors, for instance, we're transforming the value of red, blue, green into a vector or a tensor or an array of numbers, zeros and ones. That's all. We're effectively performing these transformations, standardizing the amounts. So standardizing effectively means working out the mean, standard deviation, and providing them, and applying standardization here as well. That's effectively the function that does that. And yes, so we carrying on. We're building our matrix as well. And yeah, we're stacking everything together. That's an effectively most important point here. So because we have all these weird dimensions, we're converting them into 1/2 vectors, and once we have our amount, we're kind of stacking everything together. We're using this numpy function as hstack. That provides us with a very long list of zeros and ones, effectively, pretty much. And that is what we're using to push into our system, right? So we just taking this transaction, converting it across all these dimensions, stretching it out and pushing it through our neural network, and that's how it learns. It learns to interpret these long vectors and arrays of zeros, ones, and whatnot. As a next step here, we are splitting our 50,000 record dataset into 3 parts. The first part will be training, right? So we're preparing our training data that we'll use for showing our neural network how it should work. Then it's going to be validation set, which we'll use to just see how well our network is learning during training, and the final test will be the final piece of the puzzle will be the test data set. So that's effectively what this piece here is doing. Now that we're using PyTorch and we're trying to create Autoencoder, we're going to talk about the structure of our neural network. So we are initializing it here as a special class for input dimensions. That is effectively what we're going to be doing, what we're going to be feeding to the neural network. So every transaction, when it comes in, it will be 109 predefined kind of variables, or a vector of that many dimensions. We're going to see it just now. And once that transaction goes into the neural network, it's going to go through several layers, right? So first layer is going to be 128 neurons, then it's going to be 64, and then it finally gets reduced to 16. That is effectively how autoencoders actually work. So we are taking our data, we're trying to reduce it to as a few dimensions as possible, so it kind of encodes the meaning into latent space. So it's kind of like zipping a file, really. So you take a very large file and you zip it so it's smaller, and then you can unzip it, right? This is effectively what Autoencoder does. So we're taking our transaction, reducing it to just a few dimensions, and then trying to reconstruct it, right? And yeah, this is how the model will work. So once we go to this 64 neurons and 128, we are reconstructing it. So here, these three layers will be reducing it in number of dimensions, and this will be performing reconstruction. And we, as the result, will end up with our initial input, but this will be output. So if our input is 109 variables, we will be outputting exactly the same amount. And here we're just having some code here on how this would work. This is our input, these are our hidden dimensions, and that will be our output. And then for every one of those layers, we are building our linear layer of all of this. And we're obviously attaching our reload activation function. So just a brief reminder of how it works. So if this here is a neural network, these will be individual values as an input. They'll be fed into the neural network as inputs. Then this will be our first layer, second layer, third layer, and then the final output. Right? All of them are interconnected, and obviously reload activation function will be firing up whichever neurons are meant to be progressing further down the network. That's why we're using the activation function. So for instance, if this input here demonstrates the value of I don't know what was the huge cell that would tell us our transaction is faulty and fraudulent. Let's say this would be the currency, right? Normally here would be the currency neuron. If this is a US dollar or Japanese yen, right? This would always be firing up, right? So this value here that will be fed will be going into this neuron, and this neuron, if it's a yen, it would fire up. And then if this value was for US dollar, then this neuron would fire up and change the course of how values flow over our neural network. Right, so the next step here is how we initialize the weights, right? So we have to initialize them certain ways so that the learning will be happening properly within our neural network. So we have to initialize them this way, and the biases. So we have weights and the biases, right? And our forward pass ensures that whatever we feed to a network will be going through our net, through our sequence of layers. Here we're setting up optimization, how we're going to be changing these weights. We're setting up the learning rate, obviously to propagate all the changes. And this is how we calculate the loss. This is the basic way to calculate the loss. This is mean squared error loss. So here is our training loop. We're just doing a basic setup for training. Nothing special here. And yes, so upon running it, we can see that the training loss, the validation loss. If you remember, initially we split in our data set on training and validation, and we can see that the loss is decreasing along both dimensions, and we can see how it kind of how it's shown here. So the blue one is our training is diminishing quite well, and validation more or less in So what's happening here? Here we are performing a no gradient specify. I mean, we're ensuring that we're just doing a forward pass um, and calculating the rows or demo entries squared error, mean squared error. So what do we do here? Here we're effectively preparing. Oh yes, right. So this is the like a validation matrix here, where we mapping our errors. And further up here, we are preparing for a demo. So once everything's been trained, we are partitioning our input, right? So we're about to perform a test, so we have to, this is just how we have to partition our inputs, right? Our tensors or vectors or arrays that will be passing to obviously test our neural network. And this is how we partition. Like, to cut the long explanation short, the way we have to do it is so that we know which neurons or which parts of the vector responsible for what type of information. We need this to allocate how much each individual factor contributes to a decision, whether it's a fraudulent transaction or the anomaly or a normal transaction. So if the month was the deciding factor that contributed to that transaction being considered as a fraudulent one, we will know that that part of the array was responsible for it, which is why it's got this a bit of a weird format. And here we're calculating exactly this. So this will be error squared, right? That's the square. That's the original input, and that's what we've reconstructed, right? So once again, we're providing the original vector of the transaction to our network. It reconstructs it, and here we perform the comparison, comparing the two flat tensors, and we're doing this as mean squared because obviously we want to get rid of the minus between the values or the negatives. So here we're kind of allocating it, and we're kind of saying, okay, so the amount here was responsible by this fraction of the error sum. The account was responsible by this fraction. The vendor fraction of the error was here, and etc., and so forth and so on. And yes, we're providing the answer. And this is how we actually do the scoring. So what we do here, we're kind of taking these raw values in the dictionary, yeah, we're just kind of supplying the values here, and the task here is to convert these values into something that neural network would actually understand. And this is exactly what's happening. We kind of doing the forward pass, and we are calculating the error, mean squared error. And we kind of have this threshold as well of 2%, sorry, 1.5%. And if it's above that threshold, then obviously we kind of decide whether it's anomaly or okay. And our function, our inference function, returns the result, the score, the result. So the score will be the mean squared error, the verdict, whether it's anomaly or not, and the contributions, individual contributions of individual variables. So much that we know that the first transaction was okay. That was the score. That was the verdict. Okay. Then it was the score. So this shows us mean squared error. So here it was 1.4%, which is within the tolerance. But this other transaction almost had 5%, which is way above the tolerance, which is why we saying it's an anomaly. And once again, we've got this breakdown of which factors contributed the most to that decision. Here we're just performing some further saving of the model, but overall that is how it works. So I think this is a really basic example of how this could be implemented within finance, accounting, or tax department, but it does demonstrate the point. And obviously it can be tweaked because of how we've structured our training, depending on your ERP or your types of data, types of transactions that you have. You can obviously appreciate the fact that you can tinker this neural network to fit your specific use case or specific scenario of how your transactions work. I hope you found this extremely useful. If you think of anything interesting in terms of how this could be implemented for your use case, please do let me know. I would love to hear. Thank you so much. And as always, have a great day.